When people hear the word psychology in trading, they often think about emotions, fear, greed, confidence, stress. But for a systematic trader, psychology operates at a deeper level. It is not simply emotion, it is perception. And perception evolves through a repeating cycle: ignorance, acceptance, realization. But before this cycle can even begin, there is something more fundamental: observation. Observation is where systematic thinking begins. Observation is quiet. It does not rush to conclusions. It does not predict. It simply looks at reality long enough for patterns to reveal themselves. Ancient astronomers spent decades observing the sky. Farmers observed seasons before planting cycles were understood. Engineers observed stress patterns before designing stronger bridges. Systematic traders do the same. They observe markets, price movements, volatility expansions, liquidity shifts, regime changes. Without observation, every decision becomes speculation. Observation turns randomness into information, and information is what allows this cycle to begin. The first stage is ignorance. Ignorance is not stupidity, it is simply the absence of experience. At this stage, the trader believes the market is easier than it actually is. Patterns appear obvious, strategies appear simple. A few profitable trades create the impression that understanding has already been achieved. Predictions feel accurate. Confidence grows quickly. But markets have a way of revealing complexity. A strategy that works for several weeks stops working. A strong conviction trade moves violently in the opposite direction. A series of losses appears where certainty once existed, and slowly ignorance begins to reveal itself. The second stage is acceptance. Acceptance is the moment when the trader stops fighting reality. That is a difficult stage because the human mind prefers control. It prefers prediction. It prefers certainty. But markets do not operate on certainty. They operate on probability. Acceptance begins when the trader understands that being right is not the objective. Survival is the objective. At this stage, the trader begins building structure, risk limits, position sizing, portfolio balance. Losses are no longer treated as failures. They are treated as a normal cost of operating within uncertainty. And something interesting begins to happen. Trading becomes less exciting, less dramatic, less emotional. Because systematic trading often looks boring. The same process repeated again and again. The same rules, the same execution, the same discipline, day after day, week after week. Many traders struggle at this stage because boredom feels uncomfortable, but repetition is where stability comes from. Factories produce reliable machines because processes repeat. Airlines operate safely because procedures repeat. Scientific experiments succeed because method repeats. Systematic trading is no different. Consistency is built through repetition. And eventually the trader enters the third stage, realization. Realization is quiet. There is no dramatic moment, just a gradual understanding that the system works because it respects uncertainty. The traders stop searching for the perfect prediction. Instead, they focus on process. The edge exists in the structure, in the probability, in the risk management. Small advantages repeated many times over long period of time. This is where compounding begins, not because the trader suddenly became smarter, but because the system became stronger than individual judgment. And then something fascinating happens. Realization reveals a new layer of ignorance. Because the deeper a trader observes markets, the more complexity becomes visible. New regimes, new behaviors, new risks, which means the cycle begins again. Ignorance, acceptance, realization, again and again. This is why systematic trading is not just a strategy. It is a discipline of perception. Observation replaces assumption. Acceptance replaces ego. Realization replaces illusion. And over time, the trader begins to understand a simple but powerful truth. The goal was never to defeat the market. The goal was to align with it. Because the traders who survived the longest are rarely the ones who believed they understood everything. They are the ones who kept observing, kept accepting, and kept evolving through the cycle. Ignorance, acceptance, realization. Think in odds. Act with discipline.